Good morning and welcome to IG's early morning call on Monday, the 4th of December. I'm Angela Barnes. Coming up on today's programme, well, gold has hit a record high. The precious metal has regained its safe haven role as geopolitical uncertainties prompt investors to return to the yellow metal. And the focus is also on US employment figures this week, with the US dollar under pressure as the markets await JOLTS openings data, the ADP survey, and non-farm payrolls this week. And crypto gains momentum, Bitcoin and other coins as well on the rise on the Federal Reserve's monetary policy outlook and imminent approval of a Bitcoin exchange-traded fund in the US. So lots going on this morning to start the week, but let's have a look at volatility and see how the VIX is first of all. Well, you can see for the month of November, a substantial fall, volatility down about 29% last month. But since Friday, volatility continues to edge slightly higher. However, as investors poise themselves for the week ahead, currently it's up 0.61% on the day. Well, with 30 minutes to go until the European markets open, this is how the pre-market is looking across Europe. Well, we've got the FTSE, France's CAC 40, and the German DAX, all very mixed this morning. France's CAC 40 flat, Germany's DAX up slightly there, 0.13%, with the FTSE set for a lower open, currently down 0.32% pre-market. Well, European markets closed higher on Friday after finishing their best month since January, as global stocks and bonds rallied. The FTSE 100 specifically hit a 6-week high on Friday. That was boosted by solid gains in metals miners, while markets cheered after Federal Reserve Chair Jerome Powell acknowledged progress in lowering inflation, keeping alive hopes that interest rates have peaked. Well, let's have a look at how things were in Asia overnight. Well, the markets were mixed. You can see Nikkei 225 down 0.60%. Hong Kong's Hang Seng also lower, down 0.74%, and Australia's S&P ASX 200 up 0.73%. Well, investors will be keeping an eye on a rate decision in Australia from the RBA, Reserve Bank of Australia. And given the recent weakness as well in Chinese equities compared to other global indices, the Caixin Purchasing Managers Index and trade data will also be in focus too across Asia Pacific markets. Meanwhile, let's move on to the US. The S&P 500 soared to a closing high for 2023 on Friday, extending November's rally into December. So you can see the rest of the three main indexes as well closed higher on Friday. Dow Jones Industrial Average was up 0.82%. The S&P is noted there also up 0.59%. And the tech-heavy Nasdaq Composite also up 0.55%. The Dow also rose to another new high on Friday, bringing its 2023 gain to nearly 9.4%. Ulta Beauty and Boston Properties rose 10.8% and around 11% respectively. Paramount also climbed, lifting the indexes. The market also cheered, as noted, reacting to the Federal Reserve Chair Jerome Powell's comments on Friday, saying it's premature to conclude with confidence that monetary policy is sufficiently restrictive. In early trade, the US markets, let's have a look how things are looking pre-market. The US 500 down 0.22%. The Nasdaq also set for a lower open, down 0.37% as well, and Wall Street Dow Jones down 0.15%. So this week, investors will be watching US factory orders, October data due out later, and monthly US jobs reports, which will also be key this week. Now, let's talk about gold, because it has continued to push above the $2,000 level, reaching 2147 per ounce this morning. And if I just pull up the spot gold price chart for you, let's have a look how it is doing right now. Currently you can see currently around 2075 and up on the day again 0.16%. Now, it last traded at the 2000 level in May, but it has gone beyond what it was there, broken that high reach then around the 5th of May. You can see, around the 3rd of May, it has actually busted through what it was then. giving up some earlier gains, but the surge has been thanks to the downtrend in the US dollar and geopolitical uncertainty, with investors turning to the widely considered safe haven asset. Gold is also being fueled by expectations that the Federal Reserve, as noted, will not raise interest rates further, and the markets have priced in a potential interest rate cut as early as March. Meanwhile, silver, let's move over to the silver price chart. If I just pull up a price chart that gives you a little bit more perspective here, it's followed a similar price trajectory to gold, also continuing to climb to higher, back at a level also not seen since May this year, above 2000 again. However, it hasn't broken its May record like gold, which reached 2613 on the 5th of May on the day. It's currently down, however, 0.75%. And in other news, meanwhile, in Germany, the trade surplus widened to $17.8 billion in October as imports fell by 1.2% month over month, more than exports. And then over in the US, factory orders are forecast to fall by 2.6% in October month over month. Excluding transportation, the index is seen as rising by 0.3%. Our US employment data takes center stage as well this week, with a set of indicators that could give us more clues on what the Federal Reserve will do next. According to economists' forecasts, all these are likely to reveal more softness in the labour market. On Tuesday, JOLTS job openings are forecast to fall to 9.35 million in October. On Wednesday, the ADP survey should show that 128,000 jobs have been created in the private sector in November. It is higher than the 113,000 recorded in October, but would be the third weakest month of 2023. And on Friday, non-farm payrolls, economists anticipate 180,000 job creations in November. That is 30,000 more than in October, but 30,000 is also the number of workers that have returned to work from the UAW strikes. Well, a soft job report would reinforce the message that the Fed's work is done. Any number above these expectations is likely to give a boost to the US dollar. And if we just pull up the US dollar price chart, the basket is showing modest gains this morning, but recorded a third straight weekly loss last week. It's currently up 0.23% on the day against its peers. Meanwhile, two central banks are due to decide on interest rates as well this week. On Tuesday, the Reserve Bank of Australia should keep its cash rate at 4.35%. Last month, the RBA hiked by 25 basis points, the 13th rise since May 2022. The comments accompanying the decision will also be important. The minutes published a couple of weeks ago revealed that RBA staff still expect an additional 1 or 2 increases over the coming quarters. Now, if we just pull up the Australian dollar, US dollar price chart, the pair is eyeing its fourth week of gains, with prospects now hinging on that RBA meeting and as well Q4 GDP figures, which are due out this week too. You can see the pair, though, is currently down on the day 0.42%. Last week's rally in the Aussie dollar, US dollar was driven by elevated commodity prices, positive risk sentiment, and a hawkish RBA amid a weakening US dollar, facing pressure as noted from the Fed's dovish pivot and anticipated 125 basis point rate cut next year. Meanwhile, the Bank of Canada should keep its overnight rate at 5%, leaving borrowing costs at a 22-year high. The Bank of Canada always said that it remains wary of inflationary risks and would not hesitate to move rates higher. But there is a very little risk at the moment. Headline CPI came in at 3.1% in October. And if we just look at the US dollar, Canadian dollar price chart, currently up 0.21% on the day. The dollar fell last week as economic data supported the view that the Fed would soon start cutting rates. As noted, and in turn, unemployment claims in the US rose last week, showing less demand in the labour market. Meanwhile, employment data from Canada showed a higher than expected figure that supported the Canadian dollar on Friday. Still, The Bank of Canada will likely leave rates unchanged next week. Meanwhile, the pair has broken out of its bullish channel, signalling at the moment a change in direction. We're moving on to corporate news now, and Ryanair saw traffic rose 4% in November to 11.7 million passengers. The load factor, meanwhile, reached 92%. Well, the low-cost airline said it had to cancel 960 flights last month due to the Israel conflict. To give you some context, it operated 66,400 flights. And if we just pull up the Ryanair price chart for you on the IG platform, well, Ryanair is not an all-session stock. Year to date, however, its share price has risen about 46%. And in other news as well, Petrofac has said this morning that it was in discussions over the sale of its non-core assets and that it will no longer be able to meet its full-year guidance. The company added it is exploring potential new financial options across all its classes of capital and is actively engaged in discussions with investors to take a non-controlling position in certain other components of its business portfolio. Well, if we just look at the Petrofac price chart last week, shares in the London-listed company dropped to a record low as analysts flagged concerns over its balance sheet due to payment delays. Well, moving on to commodities now, and let's look at how oil prices are doing this morning. Let's first of all start with the US crude, currently down 0.84% on the day, trading around $73 a barrel. And if we just switch over to the Brent crude price chart, it's also lower this morning, down 0.92%, trading around $78 a barrel. So the lower oil prices come despite the OPEC Plus group of exporters last week finally holding talks on Thursday after several delays in an attempt to overcome internal disagreements and raise flagging crude prices. More voluntary cuts were agreed, although quantities announced fell short of expectations. However, as you can see, oil prices remain lower despite those cuts. Well, last week, Baker Hughes' total rig count, meanwhile, rose by 3 to 625. The number of producing oil rigs remained at 500. And then also, let's just have a quick look at crypto and Bitcoin before we go, because in the cryptocurrency world, Bitcoin is gaining momentum on the IG platform. November was a second straight month of gains as Bitcoin benefits from rising prospects of US Fed rate cuts next year. Traders also anticipate the imminent approval of US stock market traded Bitcoin funds as well. Well, that's all we've got time for on Early Morning Call. Thank you very much for watching, and do keep across all our updates on the IG platforms.